BBIG. What's up, everyone? How are you guys doing? I hope you guys had a great Tuesday, a great successful trading day. I just wanted to make a quick video on BBIG, Vinco Ventures, and see what's happening and where it's going from here. So, really great day, guys. We did it. We made another green day after a couple of red days. So overall, really good. We're 21.05% on the day and 9.32% in the after hours. Did have a significant jump here from the very low, I think was 763, and then we reached after hours the top at 1147. So I want to go over a few things in this video. Short interest rate, how's that going, and what's going to change from here? Are they covering or not? We're going to go to Ortex for that. Unusual whales. We're going to look at the flow. We're going to discuss a bit the valuation stuff that's being out there. I mean, there's a lot of speculation going on. I don't want to go too deep into that. I just want to stick to what's like known, what the data is out there that is publicly known, because there's a lot of speculation going on. And I can touch as well on like a few of the options and how you can actually manage your trade, because I've seen like a few comments of people wondering how they can manage their trades, what kind of price targets you're looking for, and so on. So quickly here, I want to show you the daily chart as well. So the daily chart, I have the Fibonacci retracement to show you the support and resistance levels. So the good news here, looking at this doesn't include after hours, so keep that in mind. So if you can see here, we had that line here at 985, and then right above it where we had resistance, so we dropped here, we dropped short of that line even here, and then on here again ended up like taking a bit of a hit here. That's like 997. But if you look in the after hours, and like I said, the daily chart doesn't include the after hours. If you look at the after hours, we did end up breaking that nicely all the way to 1147. So the new resistance for me to look at is definitely the 1147, and then the second one after that is the 1130. So any break of these two would be great. That's like the range you want to look for a break for. And a break from here would take you probably to 1190, make a retest of that, and get out of there. So one of the beautiful things I've seen as well is the amount of orders that were coming in. So if you can see at different price points, this one is at like the 950, 960 range, 24,000, 7,000, 7,000, 15,000. All these are big orders, and I can tell you there's a huge chance that these are institutions. These don't look like retail orders. I don't think a lot of people are gonna have that much to like throw into a stock that's on fire literally right now. So again, 20 that's after a while, same range, 950, 960, 21,000, 30,000, 74,000, 4,000. That just shows you that institutions are stepping in to pick up any dips that are happening. It's not just retail, so that's really good that we have that on our side. And as long as that continues, you would see the same price action and insane volume we're seeing in the previous week and this week, starting today, of course. Hopefully that continues throughout the week. So 50,000 as well. After you broke the 10 level, you're going to see 50,000, 3,000, and so on. So this is something I wanted to show you real quick, and then let's jump on right to Ortex. So keep in mind, this data is not as accurate as it can be. This is 85% of the data reported by exchanges. So there's 15% missing. Keep that in mind. Most of this data is T+2, so 2 days away. So, but again, this is the best we know so far. So plus 84%, we're still really high, 34.8% short interest of the free float, and utilization is looking at 99.44. Again, utilization is really, really important. The closer this gets to 100, or if it's at 100, just means that there's no more shares to borrow, which means they ate it all, technically. Cost to borrow really high, 146.56. This is ridiculously high. 38%.51 change from last week, which was insanely high as well. So this is something good to show that there's a lot of pressure on people who are borrowing that stock or trying to short it. Now I want to show you the flow coming in here. So this is Unusual Whales. I'm going to leave our referral link if you guys want to sign up. That would be awesome. It's one of the awesome tools I use to get an idea about like where big money is going and so on. So this is the number of calls versus puts. You have 56.9% calls, still bullish, not as bullish as before, but we're still in the green side of people wanting to buy calls versus puts. 43.1%, volume 54.3, and then 45.7 for the puts. Premium 57.1% for the calls, 42.9 for the puts. Bid and ask size, again, this is important, just shows you that how much people are literally slapping the ask without thinking. So 54.4% for the calls and 45.6% for the puts. Now, if you come and look here, you're going to find that the flow includes a lot of sells to specific calls that are ending on the 10th, 17th, 15th of October as well. So this comes to two things. This is like a strategy to manage your trade. Some people like to sell covered calls, and that's completely fine. They collect the premium and they hold their stock as collateral. So technically, if you have more than 100 stocks, you can put your 100 stock as collateral and sell against that a $20 call, for example, like that one, and collect the premium. So let's say the premium for that one was $350. So you collect the $350 and then you wait. If the stock does hit 20 and whoever bought your call decided to exercise, your 100 shares are going to be sold for $20. If your stock doesn't hit 20 or it hits 20 and the guy doesn't decide to exercise, you just end up with collecting the premium and you get your shares back. So it's that simple. It's not like really something to look way more into as if this is bearish or something. I know it says bearish here, but this is because they sell, and selling they might be just collecting premium. This is something I wouldn't personally know. Nobody would know what exactly is behind the idea of people selling those calls. So but overall, if you come here again and you look here, you're going to see that the number of calls versus puts is still bullish. Everything else is still bullish. The stock itself is still bullish. And as you can see here, no coverage has happened. Matter of fact, they're still adding. And I would think that they would definitely add more looking at the price action we saw today. Now again here, I just want to show you like the volume is 134 million today. Really, really good. Not as much as the previous week on some days, but again, this is really good volume compared to whatever's happening in the market. Performance is doing well compared to like this run made it do well. From last week, we're up like 36.83%, so this is good. So again, what I want to discuss here is some shorts actually shorted the 1190. That's something we want to keep in mind. Some people shorted from the 1190 and we had that red day and we ended up around 693 and then we took the bounce. So right now that we came back for them, technically, these people are starting to feel the pressure. Whoever is shorting from here and didn't cover, that's a damn problem. They're already like drowning down there. So the good news is people right here are starting to feel the pressure again that we're coming back. So You might see a lot of covering happening if we end up getting beyond the 1190. It's like new shorts usually are not as persistent as older shorts in the stock. I don't know why, but this has been like a trend that we see. And we've seen, like, I think with AMC, if you go and look on the average, here there's a number that tells you the average, technically tells you the average days on loan for a specific stock. So we've seen that usually people who have newly shorted stock cover faster when they get squeezed, or that the price action gets near to them. They cover faster to either take the profits or like cut the losses. So that's something to think of and look forward to. So speaking about the valuation issue, there's no really any supplemental documentation that tells me that Lomotov, which is going to be acquired by BBIG and Zash, is actually worth $5 billion. So just to get this out of the way, okay? This is listed on Seeking Alpha on July 26th, and take this not with a grain of salt, take it with a bag of salt, actually. That, because as you can see here, disclaimer, this is a blog post. Blog posts are not selected, edited, or screened by Seeking Alpha editors. I've seen that being listed, so I just wanted to discuss that to make sure that you guys understand what's behind this. This is someone that actually looked at the stock, and then that was in July, where it was way cheaper. So whoever followed this is probably up a good amount of money. Fun fact: even if you just bought like literally today, you'll be up really good, about 30% or something. So overall, $5 billion. This is a third-party independent valuation. This is like, there's no way for sure to know the valuation until it gets actually acquired and you see the proxy statement and the votes start coming in from shareholders and so on. This is all speculation, and that just tells you that. But for me personally, I'm looking at this as this 99.44 utilization. I'm looking at current short interest. Anything fundamentally is great. I'm not against it. But I'm just saying, because a lot of people are putting price targets based on the valuation, and that's just speculation until this point. I hope they're right and we reach more than 33, because some people are saying that it's going to be worth 4.3 billion when you put the market cap as a whole. Zash, BBIG, and Lomotov, when they're all together, it's going to be a market cap of like 4.3 billion, which is roughly $33 to $38, that range. But again, this is speculation, so let's stick to what we know. What we know is this is heavily shorted. This is 99.44 utilization. It looks good on the chart. It is breaking resistance compared to last week. It's making good runs. It has good volume. So there's a lot of other stuff that you can take that you know and act accordingly. So just wanted to put this out of the way. And then I want to show you the options as well. So I've seen a lot of people trying to get into options into that, or getting out of options. Me personally, I trade the stock directly. I didn't touch any options. And I'll tell you why. It's some of these don't have as much open interest as I would like, to be honest with you. Like, this is really low open interest. This is really low open interest. This is really low, really low. Like, you can take it or not. The best one here is this one, $9 with 7,214. That just shows me that there's a lot of interest in that, and that there's actually either institutions into that as well, because it's a large number compared to the rest. But if you come to like 17th of September, you're gonna find higher open interest. Like this one is good, $6. 16,000 people are holding that. 22,000 people are holding that one. And if you go out, it's going to continue the same. The first time I actually covered that, I said that they're going to start opening extra, and I believe the same, extra strikes. And at the time I covered it, there wasn't even weeklies, and I was going to say that they're going to open weeklies, and they ended up doing that. So one thing I would tell you, don't get trapped in way out of the money calls. It's just not worth the risk. Buy something near the money or in the money, and then relatively out of the money maybe, and then from there, that's what I would do. I would take my profits, either roll it to another option. Roll it just means like sell your option on that date and buy a further date. Like if you have it on October 1st, stock hit today like 11, you collect that your profits, you put them into 8th of October at the 11 or the 10 or the 12, whatever you want to do. And then the other option is to take your options, get your profits, just buy stock. Go and buy BBIG as it is, whatever the price is. Because technically you're just buying it with profits. You're not risking new capital at that point. So that's another way to go about it. I've seen people selling covered calls. This is risky business if you don't know what you're doing. Specifically with something that volatile, you might lose your shares, but at the end of the day, if you bought your shares for $6 and you sold like the 19 and you have like more than 100 shares, then 100 shares are going to be sold for 19 compared that you bought them for. So let's say you have only 100 shares. You bought them at 6, you paid $600. You sold the 19 call and BBIG ended up breaking down. Somebody exercised your call. You're going to collect the premium, whatever it is. So in that case, it's $30. And then you're going to collect 100 times 19, which is 1900. And that makes you a profit of like 1930 in general. So that's another strategy that some people are doing out there. Definitely don't do it if you're feeling the pressure. Just stick to what you know. I just wanted to show you like what's out there. Definitely don't put all your money into that. Put what you can afford to lose. Try to diversify your portfolio. This is a potential squeeze. It's not something that would need to happen like this week or the next week or the week after or tomorrow. Nobody knows. I can't tell you a specific price target. I personally play it day by day. I look at the chart. I know where the resistance at. I'm looking for the break of that. I'm looking if the shorts are covering, which they're not. I'm looking at the volume. I'm looking at the utilization and so on. But again, like putting price targets on that specifically when it's a squeeze, it's something you can't really do. So keep that in mind and manage your trade accordingly. I'm gonna try and put like a video specifically for managing trades and put that out there as soon as I can, and I'll link it probably into that video later when I have it out, just to like make life easier for some of you guys that want to know like an idea of what other people might be doing and how you can manage your own trade. So that was it, and sorry if it was a bit long, but I wanted to cover a lot of phases, and hopefully that was it. And hope you guys enjoyed that one. Please feel free to subscribe, hit the like button, leave any comments or suggestions, any other tickers that you want discussed on the channel, and I will make the effort for that, and hope you guys like that one.